Okay, guys, welcome back. This is episode number 9 of the Easy Talk podcast. Today we're pretty excited because we have our first guest. We have our friend Gary Schweischer.
Try again. Try again.
It's like Swisher Sweets. Have you ever
Swisher.
heard that joke?
Gary Swisher.
It's like Swisher Sweets.
It's hard. It's a hard last name.
Right.
But yeah.
Right.
Yeah, we have our friend Gary here. So Gary, tell us a little bit about you, about what you do, and why we invite you to the
So
to the
first
podcast.
of all, thanks guys for inviting me.
Thank you.
The reason I came, we were talking before, and I told him I asked you guys. We're having a little bit of conversation about credit and financials, and I'm like, hey guys, whenever you guys want some help,
Right.
one of the things that I do is I do home lending for a bank, and I deal with credit all the time. And I thought it was a great idea, and you guys thought so as
Right.
well.
Yeah.
To invite me, so that way we can have a conversation about how to help people with the aspects of credit. So that was one of the major reasons that
Right up your alley. That's what you do every day.
Yeah.
So
So I've been doing this for about 7 years, and so I do have.
What are the main things like when you get customers? Because we get a lot of customers trying to buy a car,
Okay.
which they don't get the best approval. Like interest is high, or realistically they're just trying to purchase a car that is out of their budget.
Right.
So what's the biggest thing that your customers struggle with when they're trying to get approved for a house? Like what are
Okay. Yeah.
You know what I mean?
Yeah,
Like,
absolutely. So, first of all, and I get it all the time because, during the home purchase process, people do, whenever they come in and they want to get finance or they want to buy a home, I think one of the biggest issues that there is that, first of all, you have to prepare. You have to know within maybe 2 months, 3 months. So whenever you're going to do a major purchase like that, whenever it's going to be something for a business loan or for a car loan,
for your
or
credit and everything.
yes,
Right?
you want to prepare in terms of, okay, let me check how my credit is. I think that's probably one of the most important things.
right.
Right.
That's the thing we've noticed, that people come in trying to apply for an auto loan, and they don't have any idea what their credit is or what it looks like.
They haven't
So
prepared at all.
they don't know anything. They
And-
don't know if they have any collection
And
accounts.
they actually haven't, I would say, not prepared at all because they have been running credits and running
Right.
before that.
Yeah, so that's one of the biggest things that we try to do. Whenever you come into a bank, that we try to prepare them, and maybe they're not ready. But whenever I believe that whenever they walk into a car dealership, it's because they want the car at the
Right.
moment, right?
Right.
So that's where it gets a little bit difficult, because then once you're going to be applying, and you need a car because you're going over there for a car, you're probably going to be getting probably not so good deals.
Yeah.
Is that correct?
Yeah.
Okay. So, the most important thing to do is check your credit beforehand, maybe like a couple months before. And like if you have nowadays, because of all the internet, identity problems out there, most of the major banks. So when I'm talking about major banks, you're talking about Chase, Bank of America,
Prime lenders.
banks, like
Yeah.
whatever you have your checking account and
Okay.
savings account. All those places pretty much have a place where you can sort of know what
Oh,
your
yeah.
credit score
Free,
is.
yeah.
So they give you a rough estimate of what your credit
Right.
score is. So it's good. Now, keep in mind though, it is not really, because I know that's something that I get all the time whenever people come in. They tell me like, hey, I have an account with Bank of America, right? And they tell me, hey, it says on my account that my credit score is 720. Okay. But to be honest with you, it doesn't mean that that's really your credit score. It's more of it reflects your credit score, but it won't, once you
that's
go out
not
there,
your
it's
credit.
not. That's not really your credit score. Once you go out there and you talk to somebody, when you talk to somebody and somebody actually pulls your credit score, that's whenever you're gonna know what your credit score is.
Yeah,
Yeah.
same thing happens at the
Yeah.
dealership. Like nowadays, everybody's got
Credit Karma.
Credit
Yep.
Karma.
Yeah,
Yeah,
Credit
Everybody
Karma.
Same
pulls
thing
out Credit
happened.
Karma. Oh, I got this credit. And actually, when we run
It's
the
not
credit,
the same.
It's not the
Right.
same. It's similar, but it's not exactly
It's
the,
not the
same.
same.
But yeah.
Mm-hmm.
So I mean, what can people do? So you're saying that it's important to prepare, and even if it's a car and it's something that you want to buy on the spot,
Yeah.
I mean, you could still prepare, like because
Yeah.
you know that you're gonna buy a car. So what could somebody do to prepare? Because I've heard like you could like pay off your credit cards or whatever.
Yeah.
What are the
So,
tricks? Or,
Okay, so I know that I work in the banking industry and in the finance industry. I've been doing this for about 7 years. So, credit is probably one of the most important things
this country.
ever. Like, it's one of the most important things out there. It's more important than, I don't know, than your cell phone. I don't know, people always have their cell phones. It is more important than that because that's going to dictate everything. It's going to dictate whenever you're going to go buy a house, whenever you're going to go buy a car, whenever you're going to go get a cell phone, your future cell phone. A lot of these places are running credit. Whenever you're going to go start your electricity bill, they ask you for your credit.
Right,
And it is going to impact how much you pay, or if you have to put a security deposit, even if you're going to be renting. I know, I know that previously, whenever I was just out of college and I didn't have such good credit, one of the things that they asked me like two months in advance for
Like
renting,
Right.
just because they didn't trust me.
Yeah.
So whenever you have bad credit, I know it sounds bad, but it's more difficult. But it's more of a trust issue. People
Right.
don't trust you, and it sounds pretty bad, but it is
that's
way.
what it is.
And so
Yeah, that's
that's
what
why it's one of the most important. It's more important than your cell phone out
Right.
there.
Yeah.
So because it's going to dictate everything that you do. Not even for that, but if you like one day you want to open up a business, you want to start, you're an entrepreneur and you want to start your own business, they're not going to be dictating on the business like a future loan. They're not going to be dictating. They're going to be dictating on your personal credit. So
Right.
that's why it's so important
Right.
to know at all times what your credit score
Right.
is and how to keep it pretty good.
Yeah, and
Right.
try to work on it to keep
One of
it
the
healthy.
things, like we were talking, I mean, it's very important to know your credit, because that's, in my opinion, that's gonna give you negotiating power. Because if you know you have 700 credit score, and then the approval they're giving you, I don't know, it's 10% interest rate. I'm pretty sure it doesn't make sense. That you probably gonna get something way better. So, but that's the thing. If you don't know what your credit score is, you don't have any power because you like I've said before, you have to know more than the dealership and more than the bank. You gotta know what you're bringing into it. If you have 750 credit score, it means you're someone responsible, and there is no reason why they shouldn't approve you if you have the income. That why they shouldn't approve you for a car that you want and at a very good interest rate. So if you know that for a fact, that's gonna give you like, hey, I'm pretty sure I can get call the bank and see if they can get a lower interest.
Right.
Maybe the dealer is not dropping the interest because at the end of they're just making more money.
Well, and because what he said too, it's a thing about trust.
Yeah.
If you're working with your bank, they should trust you because they have been seeing your
Right.
your behavior. But at the dealership, they don't know anything.
They don't.
about
They
it.
don't know. Yeah. In what? So, all these scores that they throw out. So basically, you could be anywhere from 400 to 800. Believe it or not, I've seen a couple of credit scores above 800, which is very few.
Yeah.
Yeah, but it's people that really do take care. It's like a competition. Like, hey man, like
Yeah.
they know what's going. They know everything that is going on their credit. But it is what it is when it comes to score. Sometimes it's not fair. Some of the things that happen on your credit score is not fair, but it is the best way to show your relationships that you have with the financial institutions. It's the relationships that I have, that you guys have with the financial institutions, and they score. They give you a score on that. I remember one of my grandmother. She told me a story that one of my uncles back in the 80s. I don't know if it was 80s or 70s, but back then there wasn't such thing as credit scores. So one of the things it was you went to the bank, you got a loan. They would give you like a $5,000 or $10,000 loan, and if you didn't pay, they would write an article on the newspaper. So my grandmother, she would look at the newspaper every day, and then she saw your son owes us $5,000. So then she went right away to pay the bank. So that was back then. So that was back then.
And it's the same as trust. I mean,
it's the same as trust. Like, the local bank wrote a letter saying, hey, this guy owes us $5,000. Well, that's the same thing that they do with a credit score. If you don't pay them on time, they're going to report it to one of the credit agencies out there.
Yeah. So let's see. Let's say that I'm gonna try to buy a car in 2 weeks. What do you think I could do? It's 2 weeks even enough to prepare my credit? Let's have a credit that is.
It depends.
I mean, it's funny that I say this, but and you guys probably see this a lot. But whenever somebody tells you, like, whenever you kind of know what the credit score is as soon as the person walks to you and says, like, well, I had some problems with some issues. So the people already. So you should already know what's going on. Everybody should know what's going on with their credit score.
Right.
So 2 weeks. It depends on the person, to be honest with you. It could be a month. Like, I went to buy a car within a month, and then there's really no timeline because most of the people know what their credit scores are. But
the thing is that your credit score refresh every month. Yeah. So I mean, if you try to get any sort of change, if you're not within the cutoff, nothing's gonna happen. So
pretty much has to be more than at least 1 month.
30 days to see any change on the score, right?
So the credit scores are actually very difficult to change on a period of 15 to 20 days. They're very difficult. It can happen, but it's gonna take some. It's gonna take maybe some money. Right. And maybe some, writing some letters to the credit bureau. So, it's not an easy thing.
Right.
So, maybe sometimes, like, if you're 2 weeks within, hey, maybe wait it out for a month. I know that sometimes, like, hey, you need that car, or you need, sometimes you have a need. So the car is in need, especially in Florida, because of the long distances, maybe from your work, from your school. So,
Right. So I guess it's just something that you have to work on constantly. It's something that you have to keep up good, and you have to keep it up.
Yeah. So one of the most important things is to make sure you monitor your credit constantly. At least, like, I would say it's so easy now with Credit Karma, with all those apps out there, is that, to be honest with you, you just have to take a look and see what's going on, and it takes you 3 seconds, 5 seconds. So, hey, this is the score. It hasn't gone down. And, well, maybe it went up. But it really doesn't take that much time. But the most important reason why I would say that to check it on a weekly basis is because nowadays we're putting everything, all our information's online, and you never know who can hack into your social security, or can have your personal information, or if something gets reported that maybe you forgot, maybe you had a credit card that you haven't used in a while and maybe has an annual fee, all of a sudden they charge you. Those are things that happen. You had a credit card that had an annual fee for $29, right? And I see that all the time where people forget about it. and all of a sudden that $29 fee gets charged, and then you don't know what's going on, and all of a sudden you're incurring fees and fees and fees, and all of a sudden, like 6 months later, you know, you owe like $300, and it's already reported your credit score, and your credit score is goes all the way to low 600s. So it's going to create a problem for you.
Even smaller amounts like that
It could affect
your credit.
Yeah, because credit. Because credit, and to go into the ways that credit gets affected, there's 3 ways that credit gets affected negatively. One is if you apply a lot of times. Okay, that doesn't mean that you're not allowed to shop. The credit, like once you're doing a big purchase like a car, a home, you're allowed to shop. So you're allowed to pull your credit a few times. You're allowed to pull it. I would say about 3 to 4 times. You can pull it 3 to 4 times to shop around to see what the best rate. The credit bureaus know that you're shopping for something major, so they don't lower your credit scores right away for that. Okay, but if let's say within a month you apply to a lot of places, a lot of credit cards, it's going to lower your credit score because the credit bureaus think, oh, what's going on? What is going on with his financial situation that he's going out there to 10 different places to ask for credit? Maybe he needs money and he's applying everywhere else. We're just gonna drop the credit scores, so that they do it automatically when it comes to that. Yeah. The other way that your credit gets lowered is if you miss 30-day lates. Okay, so I know that sometimes people forget their payment. Yeah. So that's okay. That really doesn't affect it as long as it's not more than 30 days of the due date. The credit companies do not report it to the credit bureaus.
You can miss your due date. Just
you're gonna get a fee.
Okay,
you're gonna get a fee from whoever has your credit card or from your car loan. Doesn't matter.
Lender,
The lender is going to charge you a fee, but they're really not going to report it until it gets to 30, 60 days, and 90 days, and those are difficult to get. Like those are difficult to remove. I'm sorry, they're difficult to remove from your credit and always going to show. So once you're going to be doing a major purchase, it's going to show there, and it's going to impact them by like 40, 50 points. Yeah. Wow. So you always want to make sure that even if you're late, I tell my clients all the time, like, I know sometimes it's tough, bills pile on, but as long as you keep it within those 30 days, you don't get affected on your score.
Time-wise. Okay. And what about, not time-wise, but like capacity-wise?
Yes.
Because I've heard a lot when I was building my credit, people were like, just get a credit card, a small credit card, but don't spend more than 50%. And you should be good if you do it like that. But some people told me to pay it off completely. Yeah. Some people told me no. So, I mean, honestly, I don't know what the right way is.
Right. Yeah, and I hear that's one of the things. That's one of the I didn't touch on that right away because I know that's probably the biggest. That's the most complicated one.
Right.
And that's the one that is hardest to control, because a lot of people sometimes maybe have one credit card and they spend all their monthly check. Like, let's say you're making $2,500 on a monthly basis, right? Okay. They put $2,000 on their credit card, and their limit to their credit card is $2,200, right? So you're maxing out that credit card within that month, even though you're going to be paying it off. Maybe that's your only credit card. Okay. So when that happens, I hear a lot of people say, like, no, as long as you pay it off, it won't affect it. The problem with that is that there's no control of when you're going to be pulling your credit. And remember, these things don't get automatically done right away. Like, let's say you send the payment online, they don't report it right away that you made a payment.
It takes a little bit.
It takes a little bit of time. You're absolutely right. So my rule of thumb is on all your credit card balances. So let's say you have 5 credit cards. Let's keep it simple. You have 3 credit cards, and you have $1,000 in each that you can max out. My rule of thumb is always keep it between those 3. If you add it up to $3,000, don't go above 25% of the $3,000.
Got it.
That will be probably the best way. And that's probably the best way that I've seen, like when people have lower credit scores.
Right.
You have low balances.
Maybe a good
25
way to improve it.
That's gonna. And whenever you have bad credit scores, that is the easiest way to
improve it with a credit card.
To lower your balances, so that way you'll bump your credit scores up. Mm-hmm.
A lot of good information.
Yeah.
Yeah, because I mean, a lot of people really try and they hear things here and there.
Yeah.
But I mean, it's really good when you hear it from someone that has been working with credit.
Right.
'Cause, I mean, a lot of people tell you stuff and you try it out and you're
Right.
scared.
No, trust me, I hear it all the time, and clients like fight it out with me, like they fight it out, and I'm like, all right, man, like you got to do what you got to do.
Yeah.
But you're not gonna get the best credit. You're not gonna get the best rate.
Right.
Yeah.
Yeah. Or if you're happy with that, that's absolutely fine.
Right.
But yeah, the banks based everything your interest rate on risk.
Risk.
The risk.
Yeah.
And that's with everything. Like even, countries have risks.
Right.
There's countries that are riskier. So
Right.
whenever they borrow debt, it's
at a higher rate.
It's a way higher rate than somebody
Yeah.
like Switzerland.
And we see
Right,
in
yeah,
the auto
yeah.
industry, like we were submitting an application the other day, and it was a 21-year-old guy applying for a Mustang GT. When we submitted the application, the bank called me like, hey, they simply said this is not the right car for him. He's just starting his credit. Why does he have to buy a Mustang GT? It was too risky for them. He said this car probably is gonna get.
They base it
totaled
on
out.
the car, or they base it on the amount of the loan. Okay.
Everything, because they're thinking, like the 21-year-old guy purchasing a Mustang GT, that means trouble. She told me like this car most likely in 6 months is gonna be totaled out. Like he's gonna wreck it.
So I guess
that's what she said. I'm like,
everything into
yeah.
account, right?
They look at the age, what kind of car they're purchasing, even the makes. Like some cars are crappier than others. So if you're buying X make, X brand, and the credit is not solid, because in the auto industry, the main reason why cars get repo is because the car breaks down. Right. People either have money to make the payment or fix the car. So if you're putting a risky profile on a car that is not reliable, it's very risky for the bank. There's no way they're gonna get low interest rate. They look at everything.
I even got a customer the other day that came in and he had his outside lending, and he brought her over and he had like certain makes that he could buy.
Yeah.
Like
Yeah. One of the lenders that we work with, they have like a platinum program with like really low interest. And there are certain makes they don't approve. Even if the person has really good credit, they don't approve that program for those specific makes because they're not too reliable.
Yeah.
You know what I mean?
Yeah, because they base it on banks. Banks, they want to make money, so they want to look at what is going to make sure that they're going to be getting their return on investment. So if they're lending you out in 5 years, they want to make sure that they make the money for them to pay in 5 years. So
it's insane. I mean, they look at every single thing, because look, if they give you a $10,000 on any car, and then they have to repo the car, the lender, they're gonna send it to the auction. So, they look at how much they can get back from that car at the auction. They want to see that they want the car paid off at the end of the day. So if the car is not reliable either, they're not going to give you the best approval. So even though you have a really good credit, approvals will be better on certain cars than others.
Yeah.
You know, like for example, the example that I just gave you guys, 21-year-old guy, he hasn't been at his job for a long time. He's just starting life. You know what I mean? So why does
risky
he need?
profile
So
and risky
And
car.
it could have been
Right.
It could have been. That's another thing. Like, Credit Karma and all these like the credit measuring, like the ones that you have on your bank accounts. They give you like a mirror what your credit score could be, like kind of like the same, but in instances where you have newly established credit, that's what's going to throw off a little bit more. Or things that are differently, they all have their equation. So the three things that they look at is payments on time, capacity, which is low balances, and then if you're doing lots of inquiries, right?
Right.
Okay, those are the three major things that they look at. But there's other things in there that are not as important as those three, but they're equally as important, which is if you have newly established credit.
Right.
If you only had a couple of trade lines, a couple of credit cards, and you've only had it for a short period of time, then we don't know how long have you...
Not enough information to
Not enough
get a
information,
conclusion.
even though you could have a high credit score. The person that is taking a look at it is like, okay, he's made 3 payments,
Right.
but he hasn't made a major payment.
Right.
Or pay one of the trade lines off.
Yes, or pay one of the trade lines off. So that's where, those things you could have a high credit score, but it doesn't matter. Once a person visually takes a look at it, they'll be able to take a look at those things.
Right.
Or if they see, did you have a lot of credit cards open, a lot of them open, and maybe the amount of money that you're making. Because credit score, whenever you show your credit, the credit bureaus have no idea how much money you make.
Right.
It's absolutely, they have no clue. Just a computer that measures those 3 things.
Right.
But they have they don't know if you're making $2,500 a month, or if you're making $10,000 a month. So they have no idea of what's going on. So once, like you said, once somebody takes a look at it, they'll be able to see different things.
Right.
So those are things to keep in the lookout if you're a buyer.
Right.
Yeah.
Right. So yeah, I guess
It's pretty good.
the conclusion is to keep working at it. It's a constant
Yeah.
thing. It's not just something that you're gonna try to
It's
fix
pretty
it
basic.
before.
I mean, know your credit. If you know that you're wanting to buy a car, pull your credit and see what it's looking like. That's just gonna give you a better idea on the approval that you're gonna get, and be able to buy something realistic that is gonna fit you well. And the other thing is that, look at the cars that you're buying, because like I say, if you're a young guy that doesn't have credit established and you're trying to buy a V8 Mustang, it's not a good match.
It's gonna be tough.
Right. And the other thing, look, if you're lucky enough of having a cosigner, use it. I've seen it, in the auto industry. They're trying to establish the credit, but they have a cosigner. That changes a lot of things, because even though the car is for, the new credit, you have a backup.
Right.
Even it's not going to be the best approval, but it's going to be way better than if you were doing it yourself.
Again, trust. I mean, maybe
Right.
we don't trust you that much, but
But
we're someone
look, you
that
have
we
a backup
trust.
right there. Yeah.
Yeah.
Okay.
Yeah.
So those are the the recommendations, and
Yeah.
but you gotta know what you're bringing for the approval.
So the best client out there that actually you're allowed to take a look at your actual credit report once a year for free. You can pull it. I think it's a www.freeannualcreditreport.com.
Right.
And then you just pull it, and that's the same. That's the actual
the
same
actual
credit
thing.
report. Then that the lenders are
Lenders will
going to
look
be
at.
able to see. not the credit card. But if you show it to
What's the website again?
www.freeannualcreditreport.com.
Okay, once a year. I mean, you can
That works.
take a peek and start working from there.
Yes, because I mean, let's think about it. People don't buy cars twice a
Right.
year. Most of the people just
Most don't.
make a major purchase once a year. So, but it's always good to have other things.
Right.
Yeah,
Right.
absolutely.
And I guess it wouldn't get hit so bad just for getting that free report.
No.
No, it's not
See,
an
that's
inquiry.
the thing. Like, if you pull it once a month, you're not going to take a big effect. If you pull it 3 or 4 times a
Several
month, every month, that's what's gonna drop.
Right. Right.
Yeah.
Oh, that's good, man.
Good information.
That's a lot of knowledge. Hopefully, people will, catch something there.
Yeah.
Right.
Thank you, man.
Thank
you, Gary.
Appreciate that.
No worries.
Appreciate it, man.
Yeah.
Anytime.
Keep listening.
Have fun.
All right.